Okay, we are on to exercise number 4 in our chapter 0 homework number 1. And in this problem, we've got this campus gear shop where it sells campus stuff. Sounds like some kind of college type thing. And so the company here, the bookshop or the gear shop, has purchased 12 backpacks for $45 each during the month. The shop sold 9 of those backpacks for $80 each, and we're going to want to answer some questions down here about that, the sales and the purchases and all that stuff. So let's get started. So number 1 asks, how much did the campus gear shop pay for those 12 backpacks, right? And so maybe the first thing just to mention, this is a merchandiser, right? We are buying finished backpacks. The manufacturer, would have been the company that actually made those backpacks, right? So we are the merchandiser. We're reselling these backpacks, or the business that we're looking at, the perspective of here. And so again, we're going to just write out or show our work. This is all text boxes, so we're going to approach this similarly to we did the way we did in the last problem. And we'll just say, actually, let's just put in, we had 12 backpacks times, what was it? Let's use dollar signs too, because now we're talking, we have mixed things. So if we just put 12 backpacks, 45, it wouldn't show the dollars as much. So let's use dollar signs now to differentiate dollars versus units. So 12 times 45, so we purchase them. So it's pretty straightforward math. The biggest thing here I want to highlight is, this is how a merchandiser does inventory kind of accounting, or at least, numbers tracking. Very simple, right? And that's kind of the idea I wanted to convey with this problem, is that this is simple, and what we're going to move into is not as simple. But I want you to do this first just to have some comparison to how what we're doing in the future in chapter 1 and 2 and 3 with cost accounting kind of compares to the simplistic merchandiser type accounting and data tracking that we're doing here. Very easy. We're going to get more complex, but this is why it's chapter 0, just to get us started. Okay, so when we initially purchased these backpacks, are they an asset? An asset or an expense? Remember that when a merchandiser purchases that inventory, it is finished goods, it's ready to be sold, but it does not become an expense until it's actually sold, right? It's sitting on the shelf maybe or wherever, and the company owns it. So it is an asset at the time of purchase, and at the time of maintenance. It will become an expense later. Let's see, and become cost of goods sold specifically when it is sold. What account would contain their cost? So it's kind of weird to say that, I guess, but we could just say merchandise inventory, or inventory generally. That's the asset, that that $540 of merchandise inventory, which would be an asset. Okay, so we sold the 9 backpacks. So what's our revenue going to be from selling those 9? We've sold 9 of them, obviously. We sold them for $80 each. If we do that math, 9 times 80, $720 of sales. Cool. Okay, so what was cost of goods sold for the 9 backpacks sold? So again, we're going to do 9. It tries to pull up that same formula above. We don't want that. But we're going to have 9 backpacks times $45 equals $405 of cost of goods sold. Next problem says, what is the gross profit here? So, this kind of ties back in with our previous problem. Sales revenue minus cost of goods sold gives us gross profit. So 720 minus 405 equals, what is that? It is $315 of gross profits. Okay, what is the cost? So we sold 9. We started with 12. We sold 9. So now we have 3 backpacks left times the $45. If you do that math, it comes out to $135. And that's our cost. That's what still is the cost of the remaining inventory. And then it asks finally, does this $435 of remaining backpack inventory belong on the income statement or the balance sheet? Remember that it's the remaining inventory. It's not yet sold. It's still something that the business owns. It can be sold in the future. So that means it's an asset. And like we talked about in exercise number 1, the place that an asset will be shown is, maybe I'll say it this way: the only thing that goes on an income statement is revenues and expenses. Revenues minus expenses equals net income. So the balance sheet is going to be our spot. And remember, if you want to think of what is on the balance sheet, think of the accounting equation. It's got assets, liabilities, and equity. This remaining inventory that we have is as of yet unsold would be, as we mentioned previously, an asset on the balance sheet. All right, well, that brings us to the end of exercise number 4. Again, this is pretty basic stuff. Chapter 0, just getting us started. But I really want to highlight this to get you in the mind frame of inventory accounting and just thinking about inventory. And then also so you have something to kind of some perspective to compare against once we move into doing the work that we're going to do in the first few chapters when we start shifting our focus and pivoting towards manufacturer versus the more simple type of merchandiser accounting and record keeping that we did here and that you have already done in your previous accounting classes. All right, well, thanks everybody. I will see you in the next video to wrap up this series, and we will complete homework number 1 in chapter 0 by finishing up chapter 0, exercise 5. So I will see you there.